Sir, I have two questions.
Okay, just go ahead.
Sir, yeah, first question is, sir, um, how you execute your orders? Okay, sir, like you use, I think, um, 5 to reward, and
Yeah.
sir, just tell me your execution and how you backtest. Like,
Okay.
what's the style of your backtesting, sir?
Okay.
How you start?
Okay. All right. So somebody else had asked that question before now.
Mhm.
How I backtest intraday setups and all of those things on the chat.
Yeah,
Okay. So it's simple.
yes,
This is what I do. Okay. It's more easier if you have a replay tool or all of those things. Okay. But if you don't have a
yes.
replay tool, you can still backtest. Okay. Now, the essence of
Mhm.
backtesting is simply to learn how price had reacted off a particular area and why price has reacted off that area.
Mhm.
Okay. That is the
Yeah,
essence of backtesting. How did price react? Why did price react? Okay, that is the basic essence of backtesting. Now, when you have seen price do a particular thing over time, it builds a confidence for you to now call that a pattern or call that a system, right?
yeah,
Good. So what I do when I backtest, like what I did now, is that I go to a higher time frame. Okay, nice.
okay,
4 hour
okay.
time frame. This is a level of what supply that what has failed. So the question
Yeah,
is, why did price fail this supply? Okay.
demand. Yeah.
Once I see this happen, why did price fail this supply? I quickly pick out my replay tool and then I cut this area, and then just so that it is easy enough to find on my 1 minute time frame, because I do my executions on the 1 minute and the 30 seconds.
Mhm.
Okay, so
Yeah,
if I don't have a replay tool, there is no need to cut. Okay, I will just come back to this area and use my eyes to trace the story of what has happened, marking directly from the block that was failed to the last point of demand before price filled the block. So the price action present at the area where the block was filled. Okay, that is why I told you guys that I would have been looking to sell from here. But then there was no confirmation why I should sell from this area, right? If we look at this area, let me make this bolder. Okay, if we look at this area, there's no reason to sell from here. There's no price action that tells us to sell from here, right? This is just
yes.
price moving up aggressively. No shift in structure, no change of character, no whatever. Okay, so it means that I did not have any reason to take or execute a trade based on this. But this is my setup. Grab on liquidity, shift of structure is my setup. But I don't see a confirmation to my setup. So it means that there is something above my setup that price is interested in. Okay, so the next thing I do, I try to trace out exactly what that is. And then together, we are able to discover that there was an area of demand here.
Yeah.
There was an area of demand here that was faltered. Okay, let me take this up. All right, good. There was an area of demand here that was faltered. And we had this guy. Okay,
Yeah. Okay.
and then by virtue of what we could see, we discovered that the whole candle was not even the area of supply. It was from the 50%. Okay, so if I'm drawing from the 50%, it should marry what I already have here.
Yeah.
Okay, so the main level of demand was this area.
Okay.
So right now we are all backtesting. This is backtesting, right? Backtesting simply means studying what happened and why it happened. Okay, so we are able to trace the fact that when price got to this point, it reacted. This was a reaction. This was a nice push. Okay, of this area, or it reached into this area. And when I teach reach versus reacting, or reactions versus reaching, you understand what I'm talking about. So many people will not call this a reaction because it failed to take out structure. Okay, so it reached into this area and then it failed this area. Okay, so we are concerned about the last point of demand. When we say demand, supply, the last point of supply that failed this area. When we say supply, we want to know where the institutions pumped in their last buy order before a sale.
Yeah.
The point where the institutions pumped in their last buy order before a sale. And together we have been able to discover that this young guy here, let me make it clear. This young guy here was the last buy order before what? Before the sale. Okay,
Yeah.
so price came to that level just to mitigate this guy. It had tapped into the guy earlier with this week. Okay, let me teach you guys something new.
Okay.
Now, when you're trading off a supply level like this, okay? Now, this was a fair one because if you're online as at the time this had happened, okay, it was a nice setup. Personally, I would have been in this trade from this point, okay? And then this would have been probably a 5-arrow setup or a 3-arrow setup or a 6-arrow setup or even more. Let's see what that would have been. Okay, this is a 5-arrow already. So if we continue, we would have seen possibly 7-arrow. I take partials on 5-arrow and then I break even and let the rest play. Okay, that's just my trading style. You could have something different. Okay, so what you do when you trade off zones like this is that after taking partials, do not break even immediately. If price did not completely mitigate the body of the candle, because the volume is not in the wick, the volume is in the body. Yeah. If price fails to mitigate the body of a block, do not move your stop loss to your, do not break even yet by moving stop loss to entry, because it is very, very possible that price can still come back to the block and then mitigate the body of the block to take proper volume before moving in your direction. And then it would have stopped you out before continuing the move. Okay, so this price here just came back to tap into this guy and completely mitigates the body where we have volume. Okay, and then we had this shift in structure. Now, why did I call this a shift in structure? Why did I consider this as a breakout structure? If you look through my videos, you will understand why I see this as a structural point. Okay, I talked about some structures that were invalid and structures that were valid. So I will just highlight the video again on the group so you understand why I consider this as a structural point. This guy actually grabbed liquidity from this guy here. Yeah. This here is a grab on liquidity. Okay, and then came back into the body of this particular candle. So it grabbed liquidity off this candle and this candle, cleared all of these, and then came back to reach into the body of this candle, right? Before the further move to the upside. So this is a valid low, a valid structural point because he actually sponsored a new high. Okay, you can see this, right? So we have this and then a new high. So this low sponsored a new high. So it is a valid structural point, also because it grabbed liquidity. Okay, so once price shifted from that area and I had this imbalance here, it was enough area for me to have been looking for a setup from. Okay, so price came back to fill this and then tapped into this area and then dropped. So this would have been my entry for that sell, entry 1. Okay, so this would have been entry 1. And then if you have been following my setups, you will be looking at my entry 2 already. If you have been following my setups, you should be looking at my entry 2 already. Where will be my target? My target will be to take out this external liquidity. Okay, even if I now expect these lows to be cleared totally, my first target will be looking at this external liquidity to be taken out. Okay, and that was a 12-arrow. Where would be my second point of interest? I have this here as a grab on liquidity, right? But apart from a grab on liquidity, I also have something very important, something very exciting inside of this area. Somebody tell me, look at the chart. What do you see here? What else do you see on this price?
Imbalance.
No, not imbalance. There's something spectacular you should see on this price.
Which side, sir? Sir, it's grab liquidity here.
There's a grab on liquidity, but there's a story. There's a story inside of this zone. There's a story. Study the whole price. Study the whole price from here. Okay, from here to where you would look out for a second entry inside of this area. Just study price. Tell me something you see. Okay. Yes, I can hear you.
Sir, it's broke structure. Yeah, it's broke structure here, and there is, it's grab liquidity upside.
A broke structure upside, right?
Yeah.
and then it dumped, right? What else can you see?
Yeah.
What else can you see? You need to be able to see. If you must be an intraday trader, you must be able to understand all the little details on the lower time frame, because that will give you confidence. That's where your confidence lies.
I see a grab on liquidity here.
Where is that?
Yes, that is.
Yes, a grab on liquidity and
yes,
a break of structure.
structure.
Still very amazing, but you guys are not still seeing what I'm saying. All right, great. This here was a previous low, a structural point, right? Structural points. Let me trace the story. Let's go from here. This to this to this, and the new high, right?
Yeah.
And then this guy that was now supposed to sponsor another new high, but it failed. Once this failed, it means automatically we have a flip zone inside of here somewhere. Okay, because if you're looking at this from a buy perspective, we have a grab on liquidity here. We have a break of structure to this side. We are looking for a return to order block to buy. So some other guys, we are looking at a buy setup from this place. Also with respect to this place, guys who don't trade supply and demand, and some guys would not consider this as a broken zone because they want to see a full body close below that level, which is actually trash.
Yeah.
Okay, so this is already a flip zone. If this is a flip zone, it means there's a last point of demand inside here that sponsored the flip zone, a last point of supply. Of which, if I go to my 30-second time frame, I'll see that clearly. But then I don't want to do a lot of all of those micro time frame stuff. So let's just work with the visible last point. I'm working with your order blocks today. Okay, I don't want to be marking out too much of liquidity and line. Let me do something that's easy for you guys to relate with. Because personally, I would not be marking that. I would just be marking this. Okay, I'll just be marking this. And then waiting for my shift in structure. And I will consider this here as a break of structure for my 30-second time frame. And this back here as a pullback to tap into that structure to beat me in on my buys. And then I would have been in on this trade from this week. But then if you're trading with your order block, this was still an amazing setup for you. Okay, so this is the last point of buy before this down move, right? So the institutions had to come back up here to mitigate this previous point of buy, which is now the new point of supply, and now sell off from that area. So let's assume we had taken this as the new flip zone. Simple setups, very simple setups. Okay, we now have another how many arrow trade? Okay, still targeting the same point. Okay, this is a 9 arrow trade. This is a 9 arrow trade. So we first had here a 6 arrow trade, and we had here a 12 arrow trade. We had here a 9 arrow trade. Now, this is how I backtest. I tell myself the truth when I backtest. Would I have taken this trade? 100% yes. If I would have taken a trade wrongly and hit a stop loss, when I backtest, I would mark that area as a stop loss. At the end of my backtesting, I will record that today's backtesting, I made 3 stop losses or 2 stop losses and 4 wins or 5 wins, as the case may be. And then I'm showing you clear setups with confirmations. That is why I'm not showing you. Sometimes I enter price without confirmations, but every trade here had a very clear confirmation. So this was 3 trades taken, and all of them had clear confirmations, right? This was a nice buy setup. Even if this zone will be cleared and thrown away because it's a weak zone, price still gave us leverage. That is the essence of intraday. That is the essence of intraday. Because even when I am still wrong, because that zone should be cleared, that zone should be cleared. It's a weak low. It should be taken out. I still have an intraday setup that has given me 6 arrow plus 12 arrow. That's how many? 18 arrow, right? 18 plus 9 arrow. That's how many?
27.
27 arrow. I am still wrong. Don't forget, we are still wrong on the trend because we are trading off a zone that should be taken out on the higher time frame. But then, even with the fact that we are wrong, we have still made 27 arrow. What time was this? Between 12:26 or 11:26 and 2:05. Just trading our edge. Simply trading our edge. What is our edge? A grab on liquidity a break of structure, expect a confirmation. What is the confirmation? When price gets to that area, it should. Now, if I was trading this personally, I would be willing to buy again. I would have hedged another buy from this point. Personally, I would have hedged another buy from this point. Why? On my confirmation. Can I come in here aggressively? Yes. But if I don't want to do that, this is a grab on liquidity. This is a what?
Yeah.
Break of what?
Break of
Internal structure, right? So it means that I have something inside of here that I would visibly see on my 30 seconds that would have propelled me to enter this trade from this point. Okay, stop loss below this area. Okay, and then I would have targeted this area where I expect my, that's how I do my ping pong. Okay, and then this is a 4-hour trade. I would have targeted this area.
Sir, one question more.
Yeah.
I'm interrupting you here. What's your strategy for break even?
Okay,
For
this
example,
is what I use for.
how much pips you on profit?
No. It's a wrong approach to calculate pips in profit before you break even. Okay, delete that mindset. Okay, when you trade risk to reward, you do not calculate pips in profit before you break even. You are breaking even with respect to structure, right?
Okay.
You are breaking even with respect to structure. It is the structure that determines when you break even. Now, if I was taking this position, where's that point? All right, let's assume we are this area, right? And I have this grab on liquidity here, this break of structure, price came tap me, and I'm in this trade. The moment price breaks above this high, what do we have here? A shift in market structure. It means that price does not have any business coming out to this low, except it wants to clear the low. Anything that makes price comes back to this low is to clear this low. So the moment I have a break of structure, I have moved my stop loss towards break even. That's my break even protocol.
Okay, sir.
Okay, so I met a friend. Okay, I listened to someone that told me he only breaks even. He breaks even after 23 pips. Okay, he said he breaks even after 32 pips. I said, wow, you break even after 32 pips. And then that particular day I was trading Euro USD. And then I had 3 5 arrows. My first 5 arrow was 14 pips. My second 5 arrow was 13.5 pips. My third 5 arrow was about 14 pips thereabouts as well. So I said, if I'm using your protocol, it means I would not have broken even on any of these trades. I would just leave the trade running with the whole risk, everything open till my 5 arrow. Okay. Now this here is a 6 arrow trade. Let's see how many pips we have on here on this 6 arrow trade. This is barely 16 pips. The whole 6 arrow trade is a 16 pip move. Okay. Let's see how many pips we have on this 12 arrow trade. The whole 12 arrow trade is a 17 pip move. So if I was supposed to break even after 23 pips, it means I would never break even from this trade, which exposes my entry to all the risk it can get. So as soon as I have a tap on my price and a break of structure, already I am break even on this trade. So the break of structure is what introduces my break even.
Yeah.
Does that make sense?
Okay, yeah.
So at the moment, at 5 arrow, I have secured probably 50% of my position. Okay? Let's say at 5 arrow, I secure 50% or 80% or 70% as the case may be. Most times, I like to do 80%. Okay? Especially when I'm doing ping pong, I like to do 80%. So let's say I take out 80% at 5 arrow. So I've taken 80% here, I've taken 80% here, I've taken 80% here. And then I've taken more than 80% here because this gives me 12 arrow. So at 10 arrow, I take out the remaining 10% and just let 10% run, or I can just let 2% run as the case may be. You understand that?
Sir,
Let's.
yeah. Okay,
Yeah.
okay, sir. Keep it up. Sir, one question more.
Yeah.
Maybe you, I watched here in your in the video. Maybe you attend class with Alchemist. You know Alchemist trader from Sri Lanka.
Yeah, Alchemist. You know Alchemist, right?
Yeah, Alchemist. Yeah.
Yeah, I study.
Yeah, sir. His trading style also unique. He marked the ranges, and inside the ranges he trade. Okay.
Yeah.
Like on 5 minutes or 15 minutes or 1 hour, 4 hour.
The same approach. The same approach. Okay. Now this is my range. This is my range. This is why I am able to do all of these things I do inside of here, because I know that on the 4-hour time frame, I am reacting off. Okay, I know on the 4-hour time frame, I am reacting off a demand level that has failed. Because of that, I should have some certain level of zigzag movement before my overall run to the downward, before I see further down movements, right? So I know the range I am working with, okay? The highest point price can go is this level of what? Demand that caused the failure, the level of supply that caused the failure. That is the highest price should go. So I know the range I am working in, and I'm willing to play within that range. The same thing applicable if you're working from a supply level that is verified. Let me give you an instance on the chart. Okay, let me just draw something very fast.
So is it possible, like like same like DreamFX, if you everything mark like step 1, 2, 3, 4, so like this we will easily understand you are just the way of your teaching is a little bit complex.
Okay.
Yeah.
Okay. Now,
Yeah.
this is what we'll do. I'll try to make out a step-by-step approach to how I am.
Yes, sir.
Price. Now, the reason why I don't do that is because it does not promote flexibility. Okay, I don't want you to approach price like me. I want you to get the logic behind why I am approaching price the way I do. When you get my logic, you can now build a system that suits your own style. The most important thing is for you to get the logic behind why I am doing what I am doing. So if I say step one, do this, and then you are seeing something better you can do as your step one, it will restrict you to not do it because I did not teach you to do that. But when I can teach you the logic behind why I am doing what I am doing, you can now apply the logic on any other step-by-step process that fits your style. Okay, but this is the basic. This is the basic of what I do. Okay, if I am in a point of supply, let's assume this is the whole story, right? And price is in this area. If this is a valid supply point, it should be able to clear this low, right?
Yeah. Yes, sir.
So my first target is to see price clear this low, right?
Yes, sir.
So automatically on my lower time frame, this is my range. My range is from here to where? Here.
Okay, sir.
Now, inside of this range, price will not just come down. Your higher time frame runs. A single run on your higher time frame is a trend on your lower time frame.
Yes, sir.
Great, right? So it means that I will have both buying and selling opportunities inside of the lower time frame with the mindset that I am heading towards to clearing this external liquidity that should be taken out. So whatever thing I am doing inside of here, buy, sell, buy, sell, buy, sell, buy, sell, is to take me downward to clear this external liquidity. Any other thing I try to explain is just jargon. Okay, the whole emphasis is to follow the story on price till you get to this low, which is your external liquidity, and then you can now play. When you get to this low, you will now look out for confirmations that should either help you buy or continue with your sell trend.
Yeah. Got it.
Okay, so the idea is to understand the logic. I don't have trading principles. I have a system. I don't have trading rules. Okay, I don't have a trading rule. I have a system. Systems are flexible. Rules are rigid.
Yes, sir.
Okay, if you have a rule, you must wait for A, B, C, D, E, F, G to play out before you enter a chart. But if you have a system, you know that if A does not play out, I can substitute B for A and go low risk. Okay, so the idea is to try to build a system. Does that make sense?
Yeah, sir. And one thing more, sir, like your whole trading, like your style, your strategy, each and everything, I understand. Okay, sir. Very easy. But sir, if for example, we start from a higher time frame, for example, 5 minutes or 15 minutes, the same strategy. then it will be easy for us. On 1 minute, it's a lot of noise there. If we understand the 5 minute and 15 minutes, then we will understand on 1 minute very easily.
Now, the first thing you should understand is that there is no noise anywhere in price.
Okay,
Price is fractal. The same thing
Yeah.
happening on the higher time frame is the same thing happening on your 1 second time frame.
Yeah.
If I
know,
go
sir.
to the 1 second time frame, I will still give you the same analysis like I'm giving you here. Okay, but then, like you explained, it is important that you are able to grow from higher time frames. If you are not comfortable on the 5 minutes, you cannot be comfortable on the 1 minute. So you
Got it,
must
sir.
build your base first from a time frame that allows you room. But the reason why I go to the 1 minute time frame person to explain is because most of the details behind why I take the trade are not visible on the 5 minutes. Okay, let's go to the 5 minutes chart. Let's go to the 5 minutes chart.
Yes, sir.
Okay, this is a 5 minutes chart.
Sir, we all want to trade on 1 second or like same like you 1 minute. But the problem is here is a little bit difficult to understand these things.
Yeah. Now you should understand that it's a process. Okay, it's not going to happen in a twinkle of an eye. That is what you must understand. That is a process, and it will not happen in a twinkle of an eye. But then you will definitely get it right. Okay. Now look at this.
Sir.
Look at this. I had a confirmation inside of here that made me buy this price action on the 1 minute time frame, right?
Okay, sir.
But this is my 5 minutes. Do we have any confirmation here in the 5 minutes?
No, sir.
We can't see any confirmation here. So on the 5 minutes, I would have been waiting for this break of structure. After this break of structure, I would have now bought from this point, right?
Yeah.
So on the 5 minutes, I would have bought from this point. Why some other person has caught this 6 arrow and has caught this 12 arrow, and I'm waiting for this single buy to happen. So at the end of the day, I would not even make profit on this guy because I cannot break even. Why can't I break even? Because this low will be cleared. I am buying off the wrong points. But I'm saying if on my intraday time frame, even while I'm buying off the wrong points, I can still make good profits. That is the whole idea with the whole intraday thing. Now, the truth is that everybody must not be an intraday trader if it does not suit your trading style. Okay, but understand the logic behind it. Let it be that you know it, but you do not trade it. It is different from not knowing it at all.
Yeah,
do you understand that?
Sir. Yes, sir.
Now, it is going to be a bit difficult to understand it in a session or in 2 sessions or in 3 sessions. But the more you watch those videos and the more you listen to me say these things, you will begin to see them on your chart with ease. By default, you just begin to see them. If you're struggling to see them now, you would not see them. Okay? Because what I'm saying has to take a hold of you. It has to rest. It has to make residence inside of you and then in your mind. It has to now begin to build new pictures in your mind that the 1 minute time frame can do the same thing you do on the 15 minutes time frame with just more confidence.
Yes, sir.
Okay,
yes, sir.
So little by
sir,
little.
I watch your all videos today,
Great.
From when you start the new groups or new group on the Telegram, I watch your all videos. Very interesting, sir.
Great.
But sir, here is just only one question, sir. Just you remove each and everything from this chart, and just you start like a normal. Okay, like you start your new day, for example, for tomorrow. You remove everything, sir.
Yeah, that's what I'm doing.
Sir, sir, I understand the structure, like stop hunts, broke up structure, fair value gaps, each and everything. Okay, sir. Just I confuse on one thing, only the back testing, because in my whole, like in my 1.5 year, I never back test.
Okay.
The problem is back testing, and I have no confidence on my trading.
All right.
This is the big issue with me, sir.
Okay, so this is what I'll
how to do back test, sir. Just give me like to understand how to start from which time for intraday perspective.
Okay, great.
And now, how to do back test.
If you're an intraday trader, do you have a replay tool on your chat?
Yeah, I have, sir.
All right.
I have, sir.
Now, this is what you do when you backtest. All right. I'll go over the process of how I backtest personally. Okay.
Okay, sir. From a higher time frame to lower, like
from the 4-hour time frame.
Is this video being recorded?
Yes, it is. From the higher time frame, from the 4-hour time frame, right? I'll show you how I backtest. Now, this is a single plain price action to the downside on the 4-hour, right?
Yes, sir.
So it means I don't have anything to backtest inside of this area on the 4-hour time frame. So I
Yes,
need
sir.
to look for
Understood.
something that gives me a reason to backtest.
Yes,
Okay,
sir.
that is the first point. Now, this is how I started. I have a supply level here, right? And I have
Yes,
a
sir.
break of structure here. So it means that this supply level, with respect to what we were taught in smart money concept, if you're a typical SMC trader, this supply level, price was supposed to come here, mitigate this level, and then move, right?
Yes, sir.
Because we
Yeah.
had already broken structure at this point. But price failed to do that, right? Now,
Yes, sir.
the moment I see a failure, my backtesting is concerned with only two things. Why did price fail this level?
Got it, sir. Okay.
Second question, what did price mitigate that now caused the further move to the downside?
Yes, sir.
Okay, so now the moment I see a supply failure, the next thing I must look out for is a flip zone. You know what flip zones are, right? You've watched the video on flip
Yes,
zones,
sir.
right?
Yes, sir. I know flip zone.
Great.
Yes, sir.
So the moment I see a supply failure, once I am going to backtest, I bear in my mind I am going to backtest flip zone. I want to see how price played around the flip zone. I want to see how price tapped the flip zone. I want to see the confirmation that was present when price tapped the flip zone. If price failed to tap the flip zone, I want to see why price failed to tap the flip zone and what price tapped that was not a flip zone. It's as simple as that. The next step
Yes, sir.
I do for an intraday trader, I'm not concerned about what price do you use for your entry point. What time frame do you use for your entry point? Where do you take your entries?
Sir, yeah.
15 minutes.
Mhm.
Okay. So the next thing you should do is to go straight to your entry time frame. That's why it's backtesting. Okay.
Okay, sir.
Straight to your entry time frame. I use 1 minute. I use 30 seconds. So I'm going straight to my 30 seconds or to my 1 minute to see the confirmation I had on that time frame. Okay. So when I got to
Yes,
your
sir.
entry time frame, this is what I could discover. We have a break of structure,
Yes, sir.
right? With respect to supply and demand, after break of structure, what do you look out for? The last point of demand or supply that caused the break of structure, right?
Yes, sir.
Great. It's as simple as that. This is your last point of supply.
Yes, sir.
What happened as soon as price touched your last point of supply? It dropped aggressively to the downside. So I can now write
Yes.
this down in my trading journal that on the 21st of September, price failed a supply zone and then mitigated nicely on a what? Price failed the demand zone and mitigated nicely on my supply block and what? Dropped.
Yes, sir.
If I see this happen 5, 6, 7 times, it means it is a system that has been reoccurring. The next time when I see a supply failure or a demand failure, what will be the next thing that comes to my mind? Flip zone. When I go to my flip zone, what will be the next thing that comes to my mind? The point of supply or demand that failed the zone. It's as simple as that. I have backtested. That is backtesting. So backtesting is not magic. It's not. People try to make backtesting sound like it's some.
Yes, sir. Yeah, yeah. Just only for confidence. Yeah.
Okay, yeah, it's just for confidence.
Yeah.
Exactly.
Yes, sir.
The reason why we backtest is for confidence and then to take note of what price had done in those areas. In case, because as a trader, you must be willing to learn directly from the price. You must be willing to learn directly from the charts. The charts will always teach you something new. Okay,
Yes,
so it is possible that price could come into this area, okay, and then fail to mitigate this level and maybe give me some sort of price action that I've never seen before and then goes down, or something I've never seen before. And then I see it happen 3, 4, 5 times, and then I draw it out in my notes. The next time I see that price action happen, the next thing that will come to my mind is a what? Is a sell. Because from my back testing, I have seen this happen 2, 3, 4, 5 times. That is why people have different entry models. When I begin to teach about entry model, I think in my next Zoom, I'll talk about entry models and variations. Okay?
Yes,
so
sir.
Now those entry models and variations are because I have seen them happen several times while I was back testing. So when I see it happening in live market, I can now decide and I'm comfortable enough to enter. I have confidence enough to enter because I have seen it happen several times when I backtested. Does that make sense?
Yes, sir.
So once you mark out in your backtesting, you are only, okay, now this is the easiest way to backtest, so it does not become a problem for you. It is called an end of day markup. Okay, end of day.
Yes, sir.
So what you do at the end of the day, if you trade London and New York, it means by the end of New York, you should be done with your day. So at 9 p.m., go back on your charts. Don't go to your higher time frame. On your higher time frame, in the morning before you started your trading day, you already marked out your higher time frame trading range, right?
Okay, sir.
So what you do is that at the end of the day, go back on your charts and look out for all the entries that you failed or you missed and why you missed them or why you failed them. Like this kind of an entry. I can now say, oh, this was a grab on liquidity. Probably I did not see it when I was trading because it was too fast. And this was a break of structure already, right? And then I expect price to now come and tap into this internal liquidity, right?
Yes, sir.
As soon as price did that, I'll be looking for a confirmation, right? If I don't want to go in aggressively. So I'll wait for, on a confirmation trade, this is a break of structure on my entry, right? I will now be looking forward to coming from this other point of liquidity, the last point of sell, which is this area. And then my stop loss just below this area, where will be my target? This highs rather, will be my target. Okay, so I have backtested. It's as simple as that. Okay, and I'll say,
Yes,
okay,
sir.
this was for a confirmation entry. And then if I was taking aggressive entries, grab on liquidity, break of structure, liquidity tap here, I would have gotten in from this point. Okay.
Yes, sir.
And then I would have had stop loss probably here and then targeted these areas. It's as simple as that.
Yes, sir.
I have backtested the price action for this area. Okay. So don't,
Yes, sir.
it's not something too serious. The essence of backtesting is to build your confidence. And while you backtest, study price. That is very important. While you backtest, make sure you are studying what price did at that point. Okay, because it is what you
Okay, sir.
study from price that now sticks with you and now becomes your trading style. Okay,
Yes,
how
sir.
did I
Yes,
get
sir.
good at intraday trading? By studying the entries of intraday traders. Okay, when I see them upload their entries, I go back to my test. I just check the dates on the chart. I want to see the date on the chart and the time. So I see 300 here. I go back to Euro USD 300, and then I look out. Why did he buy at that point? And I look, okay, there was a grab on liquidity. There was a break of structure. There was a confirmation here. There was this. Now, this is my confirmation setup. I'll give you this very quick hint. The same thing I look forward to confirming a zone, grab on liquidity, break of structure, is the same thing I look forward to confirming my entry. Grab on liquidity, break of structure, entry is ready.
Yes,
the
sir.
same thing that confirms my supply, a valid zone, is the same thing that confirms my entry. So it makes the system very simple and easy to use. So when I get on my charts, I am only looking for a grab on liquidity, a break of structure. Then for precision, I am looking for the next point of liquidity or inducement level that will sponsor the move.
Yes, sir.
Do you understand that?
Yes, sir.
All right, then. Thank you very much.
Amazing, sir.
A question, sir.
Yeah, I have less than 1 minute. All right,
Okay, so
ask.
you picked this area, that area as your last point of liquidity before.
Yeah.
But then there is this next candle, the one before. Yes. So why did you not see that as a valid point to pick?
Now, at my last point of liquidity, I'm not picking other blocks. If I'm picking other blocks, I will mark this already. This is the last order block that sponsored the move. Okay, and I told you guys I don't mark other blocks. I mark the liquidity point before the order block. Okay, it does not look so much like a liquidity, a point of liquidity, until I take it to my entry time frame. Okay, if I now take this to my entry time frame, I hope I have less than 1 minute. Let me see if I can do that quickly before this goes off.